Markets, including banks in particular, selling off sharply today, in part because people fear that we're late in the economic cycle. I asked both Tim Sloan and Brian Moynihan whether they thought this bearish market sentiment matched up with what they are seeing in the underlying economy.
It does not. When I talk to our customers, and it's across the board, corporate, middle market, small business, I'll get back to small business in a minute, commercial real estate, they continue to be fairly optimistic about the economy. They will say that their biggest challenge is hiring enough people to continue to grow the business. In fact, we came out with our Wells Fargo Gallup Small Business Index today, and the results for small businesses were off the charts, highest ever.
We feel very good about the U.S. economy. The prediction was slow a little bit, but underneath that is a strong growth rate that we feel very strong about. Unemployment, wage growth, all the factors are very strong, including small business enthusiasm that we just put out the other day.
I also asked Tim Sloan whether he was concerned that Trump's trade truce with China was only temporary.
When we look at the impact of the tariffs related to China on the U.S. and on our customer base, it's not significant. NAFTA would have been had a bigger impact if we hadn't reached some sort of agreement, and Europe actually has a bigger impact on the U.S. than China does. It certainly impacts those multinational companies that have more of a presence in China.
Meantime, Moynihan was fairly relaxed about Fed rate increases.
If the reason why rates are going up is because the economy is growing, that's a good thing. Our expectation is along the markets a few rate rises next year. There's great debate about how fast or slow they'll go. I think watch the Fed, they're data dependent, and they've told you that, and there's no new news here. But the reality is the underlying economy is growing, and I think the risks for inflation are not high, but the inflation's been growing. Wage growth is stronger, unemployment. So you'd expect them to normalize in a rate path, and our expectation is they move it up 3 to 3.25. We've been more of a normalized rate environment.
So they are relaxed about the macro outlook, but clearly markets are not relaxed. All banks selling off. The KBW Banks Index off its lows, but still down about 4% today. That includes Goldman Sachs selling off sharply.